these ETFs are getting a lot of traction, and I'm going to look into them now for the first time on the channel. We were talking about the KURV ETFs. So today I'm looking at ticker TSLP. We're going to track a lot of things and put 10K invested, put this ETF to the test and see how much money you'd have 10, 20, 30 years based off the prior returns. Now, it's going to be a fun video. I'm really interested in a lot of the KURV ETFs, and you guys have been commenting about them over and over and over again. I think I've gotten 5 comments in the last week just about these ETFs because they seem to be getting a lot of traction with our monthly dividend investors, and I can definitely see why. We can see that TSLP is up 30, almost 34% just the last year, and that's not including the distributions that are paid out. A lot of information in this video. I hope you guys enjoy. If you are interested in high yield investments, in ETFs, in dividends altogether, you're in the right spot. Don't forget to like the video and to subscribe so you don't miss any further episodes. Thank you guys so much for watching. Let's roll the intro. On the KURV ETF website, they have about 7 funds currently, and I want to go over and just give a little bit of an overview about these funds. I'm not an expert on these. Like I said, it's my first video on these. I haven't looked into them too much, but they do pay monthly, which is phenomenal. So we have a couple of different ones. There's the KQQQ, AMZP. This one has about a 27.5% distribution rate. AAPY that has a 75, almost 76% distribution rate. I may have to do a video on that one if you guys would like. We have GOOP, that's about 20%. MSFY, which is on Microsoft, 18.5%. NFLP on Netflix at 36%. And lastly, TSLP with a 50.5% distribution rate all monthly. So if we go to their fact sheet, a lot of good information on here. You should always do your own research. Always check into things. Know what you're looking for before you just buy in. I really recommend it. It's not financial advice here. I'm looking at these for the first time, like I said. So by no means do I have a lot of knowledge on them, but we're gonna learn. We're gonna learn together, and that's what I think is key. So we can see a gross expense ratio of 1.15%, a little bit on the high side. A little bit on the high side for sure, which is kind of a bummer. We can see the NAV and market cumulative total return since the inception date in October 26 of 2023. So they have been around for a while. Now, I really wasn't tracking these specifically, but one thing that looks crazy with the Tesla ETF by KURV is the price appreciation has been great. And now Tesla has been on a tear, I will admit. They're still, it seems like it's following the price up pretty nicely. And that's not often what we see with some of the other ETFs. Like sometimes yieldmax, even if the price is skyrocketing, the yieldmax fund will just trade sideways or sometimes even still go down. So I'm interested in how KURV is pulling this off. And again, there's tons of information on here. We can see their strategy, diversified sources of income, premium harvesting, dividends, interest income, optimization between balance and capital appreciation potential in certain rising markets. Lower beta to underlying stock could be used as a defensive substitute for single stock investments. Tax advantage, option premiums may not be immediately taxed and therefore potential to offset short-term tax liabilities. What I really like is when a company like KURV, all these ETF companies, when they understand that people don't want to pay taxes. We don't want to be paying all these taxes and to lose a huge portion of our money because it's all being short-term gains tax, which is way higher than some of the others. So when they use these different income types to offset those taxes, I think it's really great. And I think it shows that they are thinking about it from our perspective. They are thinking about it from the consumer, from the investor's perspective. And I do really like that. So we can see the fund overview. KURV Yield Premium Strategy, or on Tesla, which is TSLP, seeks monthly income while maintaining the opportunity for exposure to the underlying stock or of the common stock of Tesla, subject to a limit on potential investment gains. So we know there's a limit. We've seen that with all of these. It's just the way writing options works. You can't have uncapped potential in the price and still make those premiums. Anyone that knows options probably has even a better understanding of that than I do. And so I get it. We're taking the risk, of Tesla skyrocketing in order to get some nice premiums. So you can scroll down, you can read everything: participation risk, options, how it's doing it, the SEC, the 30-day yield, lots of other stuff. But all in all, I'm impressed. I like KURV's website. I like how easy it is to get all this information, and their fact sheet is simple but informative. So no complaints here. What I want to do now, we're going to look at the distribution history, and then we'll put KURV to the test with 10K invested. So KURV has been going kind of insane with TSLP. This is definitely the more popular fund, I think, from KURV. I see it commented quite a bit. You can see the current price of $29.09, But the last couple of dividends have been insane at $1.30. Prior to that, they ranged kind of from the 45 to 50 range. On the low end in the 30s, 31, and then on the high end about 60 cents to 67 cents. We see they have over a full year of dividends, which is great. I love finding these ETFs that have solid dividend histories. We can kind of backtrack, see what they've been paying, what the average is. Now, this isn't indicative of the future. And what that means is I'm not saying that it's going to pay out the same or more or less in 2025 than it did in 2024, but it is nice to have kind of a basis point to understand this is what it's been paying, this is why, and tracking it compared to what the market has been doing. Just to give you some more background information, we don't know what it's going to do, but I feel a little bit better when I invest in something just knowing more of the history. Doesn't mean it's better or worse. Really, it just depends on how you like to invest. So the cool thing with Seeking Alpha, if we jump to the dividend scorecard, we can scroll down here. We see their dividend yield is 24.71%. So this is going to be the last 12 dividends added together, which is 735, and then divided by the current price, which is 29.09. So 24%, almost 25% dividend yield, which is crazy. Now, this dividend yield of 24.71% is not factoring in price appreciation. And that's kind of the key thing with this fund, because Tesla, if you guys are Tesla fans or not Tesla fans, I'm a Tesla fan. They have their new Teslas coming out. Have you guys seen them? I think they look phenomenal. They just keep, like, they're very different. The body style is a little more rigid. They look a little bit less luxury, a little more, I don't know, still luxury, but like, I don't know how to explain it, but go check them out if you haven't looked at them yet. All that being said, Tesla's going places. It is still the leading provider in EVs by far. On top of that, their charging is significantly better than any of the other ones I've looked into. And like, we use ChargePoint in a lot of businesses in my local area, and ChargePoint stock, if you guys haven't tracked that recently, unfortunately, I am an investor. I learned my lesson with ChargePoint. Just because it's the largest doesn't mean it's the best. And so that was one of the largest providers of electric charging, and it has tanked. Absolutely terrible. So I think Tesla in the long run, you have your charging aspects, you have the tech side of it, you have the vehicles, you have a leading market for the EVs. There's a lot that goes into it. But I think Tesla is going to continue to trail up. So it is nice, TSLP, to get also the price appreciation, although a little bit capped on top of, but with the dividends. So you keep buying more and more and more on a stock that you have long-term support in. Now, Tesla has bounced around quite a bit, so it really depends on, like I said, your investment strategy. But let's see how well TSLP has done with a drip calculator. So we can see dividendchannel.com. I know I got some comments about the drip calculator. Guys, I like to use it just to see what the overall return is. We're not investing since the inception of the fund. I got a comment about that saying, why would you use this? You're not investing since the inception of the fund. Well, it's nice to know what the fund has done. I mean, that's my opinion on it. If I have a 4-year history on a stock and it's lost 20% every year, I probably won't invest into it. If it's vice versa, I'll feel a lot better about investing to it. Again, this is not a tool to dictate exactly what you buy, but it can be helpful. And I think it should be a tool used by everyone because it is available to everybody. So we can see TSLP, the dividends reinvested per share, absolutely crazy, $8.64. So total return, if you had invested since the inception of the fund, is $67%, almost 68%. Now, since October 27 of 2023, it's paid out $8.64 in dividends total, which is phenomenal. And your average annual total return is 51.52%. Looking at the chart, we see a crazy red area. We know Tesla did go through a bit of a rough patch, and then it ran like mad. And with election news and whatnot, it ran even crazier. That's because Elon was involved with his election a lot, and the results were favorable to him, which is interesting. What do you guys think? Because I always think, I'm not trying to get political, please. I'm not trying to get political. But EVs, like the right won this last election, and EVs are not a focus of the right. They're a focus of the left. But Elon is part of the right. I think he's more libertarian leaning. I don't know. But it's just interesting. I wouldn't have expected EVs to go crazy under that. But I guess just because Elon's so involved in the election. Now, with dividends not reinvested, we can see total return 53%. So you're looking at about a 13-14% difference. Not terrible, but over a year, that's quite a bit. That's quite a bit. So if you're not reinvesting the dividends, you were missing out, primarily because it has run recently, a lot more recently than it had, a couple months ago. So if you had invested a couple months ago, yeah, you probably wouldn't be that much. It wouldn't be much difference, but because it's run so much. Now, I love the drip calculator. I think it's really interesting. Now, it's cool to see if you had invested $10K at the beginning, you'd be at $16,768. Quite a nice jump in a little over a year and a half, 15 months, something like that. So definitely interesting. I love seeing the drip calculator and the returns that we've seen, but let's throw 10K into this and track what it can do based on the average annual total return that we've seen the last couple of years with KURV's TSLP. I've thrown everything into our dividend calculator, and we can see for 1 year, have you bought $10,000 worth of stock, which would be about 336.25 shares, you would actually end up being paid $5,152 in dividends, which is pretty crazy. Now, when you coop that into your ending balance, now your annual dividend income goes up to almost $11,000, which is absolutely crazy. By that point, you've been compounding monthly for 24 months. So it makes sense, but my goodness, quite a jump. Now, I'm going to say the same thing I say with most of these videos with the Investing 10K. I'm not predicting the future. This is based off just the past. I put 51.52% annual dividend yield, which is factoring not only the dividend yield, but also in the price appreciation, which is just based off that drip calculator and the average annual return. I'm not putting in an amount of dividend increase or decrease and share price increase or decrease because you can't tell. I get those comments quite a bit. Oh, you should be factoring in for 20% upside and 10% NAV erosion, or well, that didn't make sense. But either way, and I can't do that because I just don't know. So if I do everything the same way, have a basis of how I do it, it makes more sense and I can compare them easier. Because the thing is this is going to be so different than a lot of the yieldmax funds too, because I don't know what Tesla's going to do. And I don't know how KURV is going to react to that. I don't know how TSLP is going to react to it. So I can't predict it. This is just a fun little prediction. It's not necessarily going to be accurate. So I hope you guys know that. But we can see we're going to jump this up and go 5 years invested. So we have monthly distribution, pays out monthly. We have drip on. So this is like, oh, I invest 10K at 25 years old. It's usually the like analogy that I use or example that I use. And then we watch how much it would change over the years at this consistent rate. We're investing in a Roth IRA, so there's no taxes involved. And all that's plugged in. It's already all plugged in for us. So after 5 years, your $10,000 investment will be at $124,500, which is pretty crazy. That means the total dividends you received over the last 5 years is just under $90,000. Which is wild. And now your dividend income is $81,700. Now, this is a little bit confusing, but the way it works is your starting balance plus the total dividends paid out over 5 years then adds those together. And so the following year is your annual dividend income for the following year is your initial amount plus all the dividends paid out. That's why the number is so different. And that's why it jumps so high, because that initial, 1 year, you had 10K with 5K paid out in dividends. Now you're going to get way more in dividends because you now have 15K for that whole time span with the compounding monthly. So I hope that makes sense. It's a little bit confusing. I don't blame you guys if you are confused. I sometimes get confused by it myself, and I'm the one making the videos. So we're going to do 10 years invested. Now, 10 years is a long time, but after 10 years, you see some insane growth with this ETF. And again, is 51% going to be a continual thing? I don't know. I don't know what Tesla's going to do. No one does. If they did, they're already millionaires. They're probably not on YouTube. So we can see ending balance of $1.5 million after 10 years of 10K invested. And you've made $1.2 million in dividends alone. Now, your annual dividend income is $1 million, which is just insane. And I know the numbers are kind of funny. You have an ending balance of $1.5 million, and now you're getting paid $1 million in dividends. It should be around a 70%. No, remember the compounding monthly with drip is what kind of changes that factor. So let's go to 15 years. At 15 years, we're at $20 million. And again, this gets unrealistic very quickly because you have to believe that a 51% return every year is very hard to do, nearly impossible, I would say. But it's fun to look at the numbers of, can it do it? If anything's going to do it, I mean, Tesla's probably one of the ones up there on my list of someone that could do it. But I mean, even over 20 years, that's tough, even for Elon. So pretty crazy. After 15 years, yeah, you have 15 million paid out in dividends, and now your annual dividend income is 12.68 million. After 20 years, it's just going to get crazier and crazier. $240 million with total dividends paid out over the last 20 years, 190 million. Now your annual dividend income comes out to 157, almost 156 million dollars, and it's just crazy because, I mean, imagine if it did happen. So the analogy I like to use, let's say you're 25, you invest 10K into KURV's TSLP, and you let it sit for 30 years. Now, TSLP has a record-breaking 3 decades, and it yields, or total return-wise, gives you 51.52% over those 30 years, compounded annually, which is insane. Well, compounded monthly, but annually with your total return. This is going to be crazy. I promise. It's going to be really crazy. When we pull these numbers and throw them into here, you can see 10K invested over 30 years, you're going to retire with $37 trillion. Yes, 37 trillion. The power of compounding, the power of compound interest is actually insane. Your total dividends are 29 trillion, and now your annual dividend income is $24.5 trillion. So again, very unrealistic, very tough to do. But since we've seen it over the 1 year period, you can turn 10K into 16K relatively easily. And then that 16K is then going to make you almost 11K the following year, if it can keep up. So I love doing this. Again, it's not a prediction. Don't come back to me. It's not financial advice. I'm not saying it's going to do this. It's just showing the power of the recent price returns from TSLP. I will be doing more KURV videos. If you guys are interested, don't forget to like and subscribe, and I'll see you in the next video.